What's going on, YouTube? My name is GT, and if you're new to this channel, we provide meaningful information around fitness and finances through interesting conversations like the one we're gonna have today. Now, I have a very interesting video for you today because today I'm going to explain to you the number one reason why you are not making money investing. Now, a lot of you are getting involved into investing, putting money into different avenues, and you're seeing either minimal gains or basically you're just simply losing money and you're not understanding why you haven't seen a level up in your account or ultimately getting the bag that you've been desiring. Now, through this video, I'm going to explain it to you, but before we get right into it, all we ask is for you to hit the like button, subscribe, and comment below a stock or a crypto or something you're invested into that you are not seeing the gains that you thought you would have seen by now, and allow me to walk you through a journey, and hopefully by the end of the video you will have the true understanding why you aren't making money, and then after the video you can start seeing how you can level up. Now we're going to jump right into it. So the first thing I want to mention to you is although we're going to create a path to leading you to the ultimate reason, it's important you take notes, because these notes will serve as a reminder for you the next time you're making investing to remember the notes and the tips and the tricks that we're telling you now that will hopefully allow you to make a sound investment decision on the next one. First thing I want to mention is called the fundamentals. Now, the fundamentals of a stock, crypto, real estate, it really doesn't matter, but you want to be looking at the fundamentals. And specifically for this, we're going to talk and we're going to lean into the stock market. So when you're trying to invest into a company, you want to observe the fundamentals. You want to know the ins and outs of the company. You want to be looking at their net income statement. You want to be looking at their balance sheet. Okay. You want to look at the amount of shares outstanding. You want to look at what's called the PE ratio, which is the price equivalent ratio. What that tells you is for every stock you own of that company, every dollar earned, you want to see how much it's worth, each dollar for that company, okay? Is it profitable? Is it overvalued? Is it undervalued, right? You want to know all of these things. You want to look at their total operating expenses. Are they spending too much money? Are they not spending enough money, right? You want to look at their gross revenues. And of course, you want to look at their profit. So if you're looking at any company, and if the company is showing you strong fundamentals, okay, all of these different factors that we just talked about, if they are showing you that they have those things in mind, then regardless, and I repeat, regardless of the price of the stock, if the fundamentals are good, then all that tells you is that sooner or later, the price of the stock will catch up to the fundamentals. Okay, so if the company is strong but the price is not, just give it time. As a great example, although it's not financial advice, we can talk about Nvidia. About 2 months ago, Nvidia was worth $92, which was significantly undervalued from where it was at its all-time high, which was close to $150 a share. So the fundamentals were good, right? It's still a profitable company. They're still increasing in revenues. They're still generating sales. They're still building AI chips. They still have a lot of cash flow. Their expenses are somewhat minimal and everything looked good, but the price of the stock was undervalued. So it was an opportunity to jump into a company with good fundamentals, just it was undervalued. So as today, as of the time of this recording, it is currently now about 2 months later, about a month and a half later, actually, $135 a share. So the fundamentals, okay, the price action will eventually catch up to the fundamentals of a stock, okay? But that's not the only factor that plays into a good investment. The second thing is events, okay? What kind of events? News events, global events, etc. So let's talk about news events. If a company has some sort of great press that comes out, you know, suddenly this company had a brand new breakthrough on an innovation, and now they're doing all these great things, you will see the price action go a particular direction. So for example, Tesla's another company. They're working on robotics. If they get some sort of breakthrough where they're now launching the Optimus robots into the stores for people to buy, the stock price of Tesla will be rising and going up really aggressively. Another example would be a company like United Health Group. United Health Group, right, had some issues with the CEO, of course, suddenly being killed last year, right? And then they've had some issues recently with some potential investigations by Medicare. So because of the press on that, that is bringing the price down of the stock. In addition, there are sometimes global events going on. It's happening all over the place now, right? With President Trump dealing with the tariff situation with all these countries, when he's raising the tariffs, sometimes the price action of all the stocks go a particular direction. When things are released of the tariffs, where they're scaling it back or they're taking it off, the price action moves a particular direction. So events, whether it's specifically to the company or global events, these things play a factor in the price action of a stock. But the event itself is simply just a catalyst for a move up. So the fundamentals may be good, but the news catalyst may be bad, and that may drive the price down, but the fundamentals may still be strong. So in time, the price action will catch the fundamentals. In the same regard, the fundamentals may not be good at all, but there is some sort of rumor or press that's positive for the stock. It may shoot up the stock higher, but that doesn't mean that the price is reflected of the fundamentals. So these all go together. And then global events will impact the price action of all stocks in the market. And it does not matter what's going on. As great as the fundamentals, as strong as the company is, if there's a global event, it will supersede all things. So fundamentals is a factor. Events is another factor. The third factor, still leading you guys to the ultimate reason why you're not making money investing. But the third factor is charts, okay? Charting. Learning the chart analysis, right? You have to learn things such as support, resistance, RSI, MACD, Bollinger Bands. There are so many different things that go into a factor when it comes to charting. And if you can understand price action of a stock through chart patterns, right? Learning the candlesticks, learning what's a hammer candle, what's a doji candle, right? What's a morning star pattern. All these factors in a chart pattern on a more day by day, minute by minute basis will allow you to make money on a particular company that you're investing into or looking to invest into based off of the charts. The chart, right? The particular chart may not necessarily be an indicator of the event going on with the company, nor the fundamental, but because of the chart, the candle and the chart at the current moment, what it indicates could be a sign in the short term of what's next to happen with the price action of the stock. So it doesn't necessarily mean that the events are good or there is a news catalyst coming, nor that the fundamentals are good nor bad, but because of the chart pattern in the short term, it may give an indicator as to what's happening next with the price action of a stock. It's great for day trading, swing trading if you're into that, options trading if you're into that. Knowing the charts will help you do that. So you have elements that will help you buy shares, that will help you do some trading, but it's through the fundamentals, through events, and through charts. But the number one reason, and I just gave you, by the way, a list of things that if you took notes, or if you rewatch this video and take those notes, you will have a wealth of information that will help you make sound investing decisions for your future and for your retirement and for your family's generational wealth and beyond. If you can study the information I just gave you, you will be able to make some significant money. And yet, most people still won't make money off of that information. Because the number one reason why most people are not making money with investing is because of emotions. You see, we are all working very hard, working countless hours, making a lot of sacrifices, not doing the things at times we desire to do because we have to go to work to make money. So there's a lot that goes into the money that's being made today. So when we put our money into risk, into assets, liabilities and such, in anticipation that it's going to make us money, we sometimes lose focus of the notes and the information we've acquired because we're looking at the price action of our money moving with that said stock or company. And when it's not moving in the right direction, we then become very emotional to the impact of our account balance going down because we remember all of the hours and the sacrifices it took to make that money. And within seconds, we're losing the hours we have put in to make that money. And so because of that, we start making irrational decisions with our money and our investing. And we then disregard all of the factors and the information we're being taught as to how to invest. So if you can temper your emotions, remove them from your investing decisions, use the information you're being taught as to what to do, what to look for, and how to invest, you then will start making significant gains based off of the rules and the strategies of how to invest, removing your emotions, understanding that in the process, your account will go down at times, that sometimes you will need to buy even though your account is down, that you will need to consider selling even though your account is going through the roof. And so you remove the emotions, you can then make sound financial decisions. If you like content like this, be sure to hit the like button. Share this with somebody you know. Share this with somebody you know that's interested in investing, that's wanting to learn how to invest, that's struggling right now to invest. And give them this and hope that this will make a true difference in their lives and in their financial journey. And if it is, be sure to have them like this page, subscribe to our channel, and of course, shoot us a comment below. We'd love to hear from you guys, and we'll see you on the next one.